Hey YouTube fam!
Hey everyone!
Welcome to Tech Crypto. The last week, market has experienced of a downtrend or bearish market, and many investors have lost a great deal in the capital. But don't worry.
In this part, we're going to talk about the best 5 strategies to maintain your capital in the cryptocurrency. Stay with us so we will see through those strategies, and please, before going any further, subscribe and turn on the notification bell. First, do not let emotions overwhelm you. Following the current news and trends of cryptocurrency market is one of the common activities among investors, but be aware that paying too much attention to this information can also lead to problems. This is especially important in a bear market because of the potential for sentimentality and hasty decisions. In fact, such a mistake has been repeated so many times that special terms have been devised for it. The first term, FOMO, which stands for fear of missing out, means fear of falling behind. The second is the FUD, which is a combination of the words fear, uncertainty, and doubt. These terms are used when people buy or sell cryptocurrencies out of emotion. The term FUD refers to the negative market conditions that result from the spread of rumors, negative news, and the concerns of celebrities and experts about the market. When fears and doubts and suspicions prevail in the market, prices usually fall because most investors sell their cryptocurrencies in the anticipation of further price declines and subconsciously help to keep the decline. The term FOMO is the opposite of FUD. When investors buy them because of the growth they see in cryptocurrencies without analysis and simply because they do not want to lag behind the market, FOMO has actually overcome them. Do not forget that no one can predict the future and no one's advice is better than analyzing yourself and reaching a comprehensive conclusion. Sometimes there are some famous people who want to establish FUD or FOMO in the market with their profession and manipulate the market in some way and move it up or down in a certain direction. So when you read important news on the internet or follow the comments of celebrities, be sure to check their accuracy and then based on your analysis, buy or sell the cryptocurrency you want or do not touch them at all.
Have a clear goal for yourself before entering into a deal. Be sure to set and stick to price target even if you are 100% sure of the success of a particular cryptocurrency. You should not invest in that cryptocurrency more than the money. That is not a problem for you. The worst thing can happen to any investors is to stare at their assets and see them depreciate in the hope that their price will rise. It is best not to invest just one cryptocurrency in the first place and to split your investment into several credible and promising cryptocurrencies. Secondly, since the cryptocurrency market, unlike other markets, is open 24 hours a day and 7 days a week and has a lot more volatility, you need to set price target before entering a trade. This means that you need to know what price you want to take your profit, or if the price goes below a certain level, it is better to leave the deal and wait for better position. Remember that even if you have all information you need to analyze, a cryptocurrency momentary event like hacking a project related to that cryptocurrency or a negative comment from a celebrity can cause it to drop a few percent quickly, and you will know what has happened is that a large percentage or your capital has been wasted. That's why you should always set a profit and loss limit for yourself. Reputable exchange allow their users to avoid such problems by setting a profit and loss limit when making a transaction. Profit limit is the price of a target that you would like to sell your cryptocurrency. If your price reaches that range and receive a profit. The loss limit is also the price that you set in the exchange office, and if the price reaches that range, your cryptocurrency will be automatically sold. so that in case of further loss, your loss will not multiply and you buy the same cryptocurrency at lower price. Cryptocurrencies experience extreme fluctuation every day, and if you do not have the necessary experience and knowledge, you can easily lose your capital. So setting a goal and choosing a good strategy can keep you away from the potential dangers of this fluctuation.
The third step is to keep your cryptocurrency. If you do not have the patience to deal with exchanges and price charts and do not want to stress, the best thing to do is to buy a valid cryptocurrency and keep them for a long term. If you bought a cryptocurrency at the price went down, you still have not lost until you sell it. Consider Bitcoin that has maintained its long-term uptrend over the years despite the declines. Do not forget that Bitcoin and similar cryptocurrencies have a limited supply, and this scarcity will increase their value in the long run. Therefore, if you have invested in cryptocurrencies with multi-year goals, these falls and price reduction should not affect you. Keeping cryptocurrency, especially for beginners who do not have enough experience and knowledge to trade daily, weekly, or monthly, is cheaper and better because they do not have to constantly stare at price charts and worry about making the wrong decisions.
Do not forget to save profit and buy at a lower price. Always make a profit by selling some of your asset when you make a profit, and add to your asset when prices fall. One of the safest and easiest ways to stay safe from cryptocurrencies and declining prices is to convert some of your asset into fixed value. Into the fixed value currencies. By doing so, it is called saving or saving profit. You are actually taking part of the profit you have gained from rising prices, and you are waiting for another suitable entry point. For example, suppose you bought Bitcoin for $30,000 and now price is this cryptocurrency has reached to $50,000. You can cash out half of your assets and wait for the next market move. If there is an uptrend, the remaining half of your asset will grow with it. But if prices go down, you can buy another amount of that cryptocurrency at a lower price with your cash and wait for the next uptrend. This is one of the most important use of the stable coin, such as currencies, the most important of which is Tether, are also called fixed value currencies. The reason is that because $1 is stored in the bank, for each unit its price always remains the same as $1. How much of your assets turn into Tether and what time and when you buy cryptocurrencies again depend on your personal analysis and strategy.
The fifth step is to take advantage of opportunities. When everyone is scared and the market has collapsed, there is actually another opportunity for you to buy what you can make the most of. Even when the cryptocurrency market collapses, there are countless opportunities for profitability. It's important to know where to look. In such situations where others see nothing but failure, new opportunities for low prices have opened up for opportunistic investors. Of course, we must be careful with what cryptocurrency we want to buy. This is also true in a downtrend. It's true that the general market trend is downward, but the prices do not fall directly. Sometimes, after the price of a cryptocurrency has plummeted, its price also increases slightly. Discovering these opportunities and being able to take advantage of them depends on your experience and knowledge of this market. Another issue is the activity in futures markets of cryptocurrencies, where prices can also be taken advantage of. In such markets, you sell the cryptocurrency that you guess will experience a price reduction at the current price, and after the prices fall according to your analysis, you buy it and thus make a profit. It goes without saying that working in the futures market and using levers requires experience and skill, and if you enter them without awareness, you will be more likely to lose capital. Acting in financial markets and buying and selling different assets requires sufficient experience and knowledge due to their fluctuations. This is especially important in the cryptocurrency market, where there is no limit to the time and amount of gains and losses, and the range of fluctuation is more severe. There are some strategies that can be used to protect your assets or minimize losses even in the downturn market when everything is bloody.
In this video, we pointed out exactly the same strategies and said that we can survive by doing things like controlling emotion, setting goals, long-term maintenance of cryptocurrency, saving profits, and buying at a lower price, as well as taking advantages of the falling markets.
We would like to hear what you think of the strategies that we have mentioned, and if you know any more, please write down in the comments, leave a review, and don't forget to like the video. Bye!